One area of the market that most do not think of as being a really rich place to find passive income is actually a place that I've been heavily overweight the past several years, and that's the precious metals, especially the gold sector. And the reason why it's not viewed as a big income spot is because gold itself is just a precious metal. It's, some say a form of money, some say a commodity, others just say, oh, it's a store of value, a speculative instrument, but it just sits there and glimmers, right? And so you can't generate income from it like you would a farm or a rental property or whatever. Or at least that's been the conventional wisdom. I actually disagree, and I'm going to talk more about that in this video. But there are other places to invest in gold as well. You can invest in gold ETFs, and yeah, you can sell covered calls against them, or you can sell puts against them and generate some income there, but then you're capping your upside potential, and so there's a trade-off there. Is there really value being generated? I would argue no, unless you're really good at trading the technicals there. And then finally, there are gold miners and streamers and royalty companies, and those themselves do generate profits, at least if they're good ones. They can pay dividends, and so you do get some passive income there, but typically these dividends are quite low, and so the income stream there is also somewhat muted. So why have I been investing here so aggressively? Well, I've been very bullish on gold, and in this video I'm going to discuss the bullish case, but I'm also going to share a way that you can actually generate very attractive income from gold and how I'm pursuing that. So before I get into this video though, if you like dividend investing, if you like learning unique ways to generate income, how to outperform, what my investing philosophy is, how I put portfolios together, some of my favorite ETFs and CEFs, as well as some of my least favorite ones, dividend cut warnings on some popular dividend stocks, etc. Please subscribe to this channel. I try to put out several quality videos every week for you guys. Thank you so much. It'd mean a lot to me if you'd subscribe. Okay, so what about gold? Why am I so bullish on it? Well, first and foremost, I'm very concerned about the fiscal situation in the United States and really across the world, but especially in the United States. We have runaway budget deficits. Neither party seems very serious about cutting spending. And so that, to me, is one of the biggest problems. We're nearing a point of no return where we'll enter a death trap where the interest rate on the debt is so high that it's eating up more and more of our budget. So we're simply having to borrow money to pay the interest on our debt. And it's going to get to a point where there can be no digging out of the hole apart from mass inflation, money printing, or mass tax hikes, either which are going to probably crush the economy. And so that's my biggest concern, and gold is a great hedge against that because either of those scenarios are going to cause mass panic. The dollar will likely lose value, probably lose its global reserve status if we get to that point, and that's going to cause gold to skyrocket. Of course, I hope we don't get to that point, but it's a way of hedging against that outcome. And honestly, I'm not optimistic at this point, just given that neither party seems to prioritize it, and the voters who currently control the primary process, I don't seem to care too much about that either. Why else though? Well, there are also growing geopolitical risks. Obviously, the war in Europe between Russia and Ukraine continues to rage on, has a risk of escalating. There's always a risk of tensions in the Middle East between Israel and Iran and other parties involved there, but mainly in the Far East. Just this past week, there was a big, as of this filming, there was a big parade in Beijing where Putin, Kim Jong-un, and Xi Jinping were all present, the leaders of Russia, North Korea, and China, along with several other countries. And it was the largest military parade in Chinese history. They were flaunting their newest weapons, their technological breakthroughs, their nuclear triad, their autonomous weapon systems, their hypersonic missiles, et cetera, et cetera. And there was a major statement of Chinese military power and potentially even Chinese intent to seize Taiwan. And if they do end up seizing it, that could plunge the world into a depression because the world's two largest economies would likely come into conflict. There would be massive trade sanctions, massive disruption of trade through East Asia, which is, one of the most economically vibrant places in the world. And of course, Taiwan is the global semiconductor capital that if the semiconductor chips produced in Taiwan were no longer accessible, it would cause the AI boom to come to a screeching halt. Major mega cap stocks would crash. The S&P 500 would crash. And it's estimated by some that global GDP would contract substantially, pushing us into a depression. And so that's a major problem. And generally, when that sort of environment happens, that's favorable towards gold. And certainly I expect gold, even if it were to maybe not soar, but maybe it would. But even if it wouldn't, it would still very likely outperform the stock market in that sort of scenario. Of course, if the U.S. were to suffer a defeat, even if it was a perceived defeat in the war, that could threaten the global reserve currency status of the U.S. dollar, which again would be a huge event that would bolster gold higher. So there are many reasons to be bullish on gold right now, just from the big picture perspective, but even like current events. For example, central banks have been buying gold very aggressively the past several years as they are gradually diversifying away from the dollar. So you could say that de-dollarization is accelerating. That's a major tailwind for gold. Individuals in China and India, especially China, have been buying gold because they've lost confidence in their property market, because their property market has been cratering. They've lost confidence in their stock market because of government meddling and leading tech companies like Alibaba. And so they see gold as a safe haven where they can put their wealth and feel somewhat good about it. And I think that trend is starting to catch on in the US as well. Again, because of these concerns as well as inflationary pressures. So that's another major tailwind for gold. So there are a lot of reasons to be bullish on gold and to expect it to move higher moving forward. Now, how am I generating income from it? Well, again, many ways you can generate income, and I already mentioned them, dividend stocks, whether it be miners, streamers, or royalty companies, selling options or investing in funds that employ a notional covered call strategy to generate income as well. But there's a third way that I do that I actually use my favorite, and that's through bullion leases. And what that is you just simply buy gold bullion, and through a third-party platform, they lease your bullion out, they store it, and they lease it out to jewelers and other companies that deal with precious metals, whether it be gold or silver, mainly gold, who they make money off of a spread, like say a jeweler. They make money by, the cost of the precious metal, and then they sell it, and then they mark it up based on, the cost of their labor and craftsmanship, and then obviously a spread to make a profit. Now, the biggest risk with that is that the price of gold is going to fluctuate wildly. Now, it could cut both ways, right? If they buy it and then gold jumps higher and they sell it, they're going to make a bigger profit. But if gold plummets, it can wipe out their spread and they can actually lose money. So ideally, they're not in the gold price speculative business. Otherwise, they'd be a gold trader. They wouldn't be a jeweler. And so what they do is they hedge that exposure they can buy hedges, but those can be more expensive and complex. Instead, they can simply just lease the gold or the silver that they're working with. And so that's where gold leases step in, that you lease them the gold, and you have ownership of the gold, and they give it back to you, but it's on their balance sheet such that they don't have to worry about, it hedges the gold price exposure that they have while they're maintaining. And so that's where that comes in. I use a platform, really it's the only good one that I'm aware of, called Monetary Metals. I have a link to it in the comment section in this video. It is a place where you can go on there, you can buy gold and silver from them directly, which is what I do because they don't charge much of a premium to spot at all, much cheaper than buying your own gold and silver. And then they store it for free, they insure it for free, and then they put it into leases, and you earn about a 4% yield right now on gold, similar yield on silver, although gold leases are much more common on that platform. And they pay you a yield, and you own the gold the whole time. So it's similar to owning a rental property, for example, and having a property manager handle it all for you. It's very passive on my end, even owning a rental property and having a property manager handle it for me. And I get a nice income yield along with the full upside that comes with owning the bullion. And at any time I can, especially when the gold is not in a lease, the leases typically last about a year, I can either sell my gold to them and they give me cash, or I can have them ship the gold to me. So it's a great way to do it. Again, especially for a long-term buy and hold gold scenario, it's much better than ETFs because you're not paying the expense ratio or any kind of storage fee. You actually own physical bullion, and you're earning a yield through the whole process. So it can lead to much better long-term total returns than just holding an ETF that has precious metals in it. Of course, you don't have quite the short-term flexibility, the liquidity, but that's the trade-off. Again, if it's a buy and hold for the long term, I think the bullion leases are much better. If you're just wanting a short-term hedge or just a short-term trade, then obviously ETFs are better. Gold mining stocks are kind of an in-between play, but note that obviously gold mining stocks come with a lot more risk than just holding bullion. They're also a lot more volatile. Over the long term, bullion has significantly outperformed gold miners, and the yields that they generate through dividends are often materially less than the 4% yield that you can get currently through monetary metals leases. And so for those reasons, that's my favorite place to allocate metals investments. I have been heavily overweight miners, and as they've soared higher this year, I've been gradually selling them down and recycling the capital and putting it into monetary metals leases as more of a buy and hold for the long-term type setup. So anyway, that's how I'm generating a yield from gold. That's how I'm positioning my portfolio, overweighting it to benefit from this long-term macro tailwind for gold and silver, and hedging my other dividend stocks that I hold against a really negative outcome for the economy while still generating a yield in the process. Hopefully that was valuable for you. If it was thought-provoking, and if it was, please give the video a like. It would greatly aid in its distribution. Please remember to subscribe to the channel for more content like this. I really appreciate it. Thank you so much. See you next time.